What's up, guys? My name is Nick and welcome to the channel. In today's video, I'm going to be reviewing Cathie Wood's ARK Innovation Fund. But before we get into that, I want to show you what my portfolio has done this week. So as you can see, I have $43,866 and I actually lost $956.69 this past week, and I earned dividends of $9.45, and I actually have $50 in my cash balance. So let's see what that's going to auto invest into. If I view the details, we're going to buy a little bit of American Waterworks, Home Depot, and Texas Instruments. Now let's go to my activity feed. And since the last video, I received a $15.08 dividend from Southern Company. I deposited $125 as always every single Monday, and I had 3 buys of Home Depot, RYLD, and Texas Instruments. Then I received a $5.48 dividend from Johnson & Johnson, and on the 8th. On March 10th, I received 2 dividends, one $11.79 from IBM and $1.94 from Microsoft. Then I actually received $50 in a referral bonus on March 11th. And basically what that means is someone clicked my link for M1 Finance in the description. They got $50 and I got $50, which is really cool. So whoever clicked the link, thank you. And congrats on starting your investing journey. And I hope you have fun with M1 Finance. I've enjoyed it in the 2.5 years that I've been using it. Then also on March 11th, I had 2 buys with the dividends of American Waterworks and Home Depot. And then next, I want to show you guys my dividend growth chart. I don't think I've shown this in quite a bit, but if I scroll down here, you can see that not even halfway into March of 2022, and I have $93.18 total for the year so far. As you can see, $451.42, and my first quarter average dividend is $150.47, which that number is just going to continue to increase until the end of March. I think I'm projecting about $181 or $183 in dividends for March, which should beat December. I'm hoping that I beat December because that's the equivalent month 3 of the quarter. And now let's get into Cathie Wood's ARK Innovation Fund, the topic of the day. So a couple weeks ago, so here's the ARK Innovation Fund, $55.58. And as I was saying, a couple weeks ago, Cathie Wood did an interview on CNBC. And one of the things that the host asked her was, he said, are people, shorting innovation? Which Cathie Wood believed that people who were shorting her fund. If you've heard of ARKK, the ARK Short Fund, Cathie Wood said that they were shorting innovation. And Cathie Wood also made a point to mention that her portfolio, which I'll show you how it's doing in a second, she said her portfolio is in deep effing value territory. And something that I want to say, this is my opinion, if you ever hear someone say that a stock is in deep effing value, I would say run for the hills. That is crazy talk. That's a deep effing value is a buzzword. I would just stay as far away as possible. But what I also wanted to show you is the market cap, 10.24 billion. It's actually a really good market cap. It means a lot of people are investing into this fund. And it actually has a dividend yield of 1.41%. And it does have an expense ratio of, what I've seen for the expense ratio is 0.75%, or it could be 0.78%. So either way, you're either getting a 0.63% dividend from ARK or a 0.68% dividend. but I believe most people buying ARK are in it for the growth. And let's actually look at that. So we have year to date, it's actually down 42.7%. The 1 year, it's down 56.87%. However, I will show the 5 year where it's up 137.22%, and the 10 year hasn't been around for 10 years, but is up 172.72%. But that would actually be interesting to go back or look back at this in 2024, October 31st, 2024, to see how it actually performed in a 10-year period, and then compare that to the S&P 500. So let's look into the ARK Innovation Fund. As you can see right here, this says expense ratio of 0.75%, but I've also seen 0.78, which is a high expense ratio. But in a previous video, I did show you guys NewSea, which also had a high expense ratio. And I'll be showing you funds like RYLD and QYLD that also have high expense ratios. So I'm not going to knock it on that. However, I did want to scroll down into the top 10 holdings. So the ARK Innovation Fund has 36 holdings. Out of those 36 holdings, only 12 of them are cash flow positive, which means only 33% or 1/3 of the stocks in this fund are actually making money, which is insane to think about. And so out of the top 10 holdings, which you have Tesla, Teladoc, Roku, Coinbase, Zoom Video, Exact Sciences, Block, Unity Software, UiPath, and Twilio. Out of these 10 top holdings, only 8 of them are cash flow positive. I'm sorry, 7 of them are cash flow positive. 3 of them are not. And I'm going to go over these top 10 holdings one by one, and where I'll be giving you more details on them. But so the ARK Innovation Fund, it's known for innovation. And when I look at these top 10 holdings, I don't really see a lot of innovation. Like I said, I'm going to go through them one by one, but I've already gone through them, and I see two of them out of the 10 that I find to be innovative. So first up, we have Tesla, which is a cash flow positive company in the top 10 holdings. It is currently year to date negative 33.71%. And I would say Tesla is innovative. With their electric cars and their self-driving software that they're working on, I will, even though I'm not that big in Tesla because it's a growth stock, they don't give a dividend, I do still see Tesla as innovative, so I will give them that. And it is the highest weighted stock, and it's probably where a lot of the growth has come. But let's go down to Teladoc, which is cash flow positive, and year to date it is down 42.56%. So basically what Teladoc does is it just connects people virtually to a doctor, which isn't, I don't think that's innovative at all. You could use Zoom, you could use FaceTime, you could use Facebook Messenger. I'm sure WhatsApp would work. There's so many different softwares that you could use to connect to your doctor. And I know my girlfriend actually uses Zoom to do virtual conferences with her doctor. So that's when I said is not innovative. Roku, the third top holding in the fund, they are cash flow positive. Year to date, they are negative 55.47%. I mean, my parents have Roku, my aunt has Roku. There are a lot of older people I see use Rokus, but the reason I don't think they're innovative is because you can just, there's Amazon Fire Stick. We actually own smart TVs, so we have all the apps like Netflix, HBO, YouTube, everything on our smart TVs. So I'd say Roku, not innovative. Next up is Coinbase. which is cash flow positive, and I don't think it's innovative at all. I mean, there's a ton of crypto exchanges in the world. Like you have, I don't know, BlackFi, Gemini, a new one, Celsius, and Coinbase is also year to date down 36.24%. Next up is Zoom Video, which is cash flow positive. It's down 46.75% on the year. And I mean, so ironically, I do use Zoom to film these episodes, but I'm using the free version. And like I've said, you can, for when it comes to video conferencing, there's Microsoft has video conferencing. Like I said, you can use FaceTime. Was it Facebook Messenger? So there's so many different ways to do video conferencing. I don't see Zoom as a real innovative company. Now, Exact Sciences, this is a cash flow negative company. Year to date, it is negative 23.03%. However, I do find this to be an innovative company because they do cancer research mostly for colon cancer, and they did innovate a way where they can test your stool, your DNA in your stools. So I do give Exact Sciences the other innovative status. Now, Block is actually, they changed their name. It's Square, the payment processing company. They're positive cash flow, and they're currently year to date down 37.86%. And I would say they're not innovative. I mean, you've got PayPal as competitors, probably Cash App, Venmo. So there's nothing really crazy that Block or Square is doing. Next up is Unity Software. Negative cash flow. They are down 43.12% on the year. And they're a gaming company. So there's tons of gaming companies, probably too many to even think about. So I'd say they're not innovative. Next up is UiPath, which is a negative cash flowing business, and they are down 40.26% on the year. And they do automation software, which I don't think that's innovative. There's plenty of other companies that do automation software. So let's just go down to Twilio, which is negative cash flow. They're down 49.49% on the year. And this is also a company that I don't think is innovative. They just help with, it seems like they help with marketing. They do stuff like mass texts, mass emails, stuff like that. There are plenty of other companies that do that. And actually, now that I'm looking at my list, it looks like only 6 out of 10 or 60% of the companies in the top 10 holdings are cash flow positive, which is pretty crazy to think about. And if we just scroll down here, you can see the majority of the stocks are North American. You have some European, and then Middle East and Asia. Then now I actually want to do the portfolio back test, which same parameters always, year to year. Start year is 1985, even though it's probably not going to start until about 2015 because ARK is a new fund. Putting in $100,000, and we will be showing the dividends. We'll be displaying the income. We've got the S&P 500, QQQ, and ARK. And if we scroll down, I don't think it's any surprise that ARK is at the top, because in the year 2021 or 2020, when the Fed lowered interest rates and they started pumping out a lot of stimulus checks, ARK was up, I think, 150% in the year 2020, which is, oh yeah, it says best year, 152.82%. Absolutely insane. Whereas the QQQ's best year in this time period, let's see where it starts. Yeah, starts of January 2015. QQQ best year 48.4%, and then S&P 500 best year 31.22%. Now, if we look at worst year, ARK so far, their worst year was, I want to say last year or maybe even a prior year, down 25.5%, QQQ 12.83%, and S&P 500 8.07%. So definitely a lot safer during the drawdowns. But if we look, the final balances, S&P 500 242K, QQQ 355K, and ARK 384K. And let's just go to the highest point where ARK was up to $743,000. Now, I did mention earlier their best year was almost 153%, but I wonder how many people actually bought ARK in before March, before they had their huge run up. It would be interesting to know because, if you bought here, you've had absolutely horrible performance of ARK just tanking. But if you were able to buy it low and sell it at here, then I would say you're a genius. So let's scroll down. I did want to see the income because this is interesting. And I'm just going to skip over these years. Well, actually, as you can see, 2015, ARK paid the most. 2016, they paid no dividends. 2017, still paid a little bit more than S&P 500. 2018, they paid a lot, 6,000. 2019, they were actually the lowest. And then 2020, they paid a lot again, 10,877. And then 2021, it looks like they're still at the top, 4,200, QQQ at 1,700, and the S&P 500 at 3,100. But of course, like I said before, I don't think people are buying ARK due to the dividend. They're buying it for the growth, or at least they were. Now, as we've seen, it's in a huge decline. So I wouldn't invest in ARK. And before I did this video, I actually didn't know ARK had a dividend. But even with the dividend, I wouldn't invest in this fund. The income is too sporadic. Yes, they've had some great years, but then they just don't pay at all, or they pay a really low dividend. And then it goes up, comes down, and I doubt they'll be paying a dividend this year just because they're losing so much money. And we have that Fed meeting coming up in a couple days where I imagine it's going to continue to drop the market. But of course, I don't know. I would always say do your own research. But when it comes to ARK, I'd say you probably don't want to buy it. So guys, that's it for this video. Don't forget to like the video, comment down below, and to subscribe. And don't forget to sign up for M1 Finance to get $50 for free when you deposit $100 to start investing. Same with Webull. You can click my link in the description. And I think they're giving away 5 free stocks when you sign up and deposit $100 and hold it in there for 30 days. So guys, thank you, and I will see you next week.